You're not sharing yet. Bring your screen up, Matty.
Coming, bro.
Mm-hmm.
Let's rock. Coming, bro. Coming, bro.
And that audio always means that we are here and we are live on YouTube. We've got Coach Matt, Coach Tim here today in today's Tackle Trading Halftime Report 2/12/2019. Matt, how you doing this morning?
Not as good as the market. That's how I'm starting out today. I'm doing fantastic, Tim. It's a pleasure to be with the halftime crew here for Tackle Trading again for the day. What is today? The 12th, February 12th.
2/12. Yeah, that's right.
Fantastic. The market is looking to maybe hypothetically breaking out here. Obviously, got to see it close, but market's celebrating a little bit of positive news coming out of the Chinese trade deals. Mnuchin and Robert Lighthizer are landed in China today. They're meeting on Thursday and Friday with the Chinese delegation, and we got a March 2nd deadline coming up really, really, really quick. So you got a little positive headwind there, but a lot of this movement is backed on the government coming, the Democrats and the Republicans agreeing on, language to not shut down the government again. And we're just waiting on President Trump's approval of that deal. And no, he did not get his funding for the wall in the deal. So it's still a little bit of shaky ground, but it looks like the Republicans in the Senate are moving forward, and we'll see how the House responds to it. So that is positive news coming out of the United States Congress coming last night, and that's what's really kind of driving the market.
Yeah. The only thing I'm curious about right now is if you're going to share your webcam. I want to see those pretty eyes of yours.
I'm all over the board today. There we go.
Hey, listen, we do a lot of Zoom meetings. I know how it is, brother.
I've been on Zoom for 2 hours this morning. I was like,
that's
wow.
Right.
Okay, there we go.
Hanging out in the morning. This breakout here, obviously it needs to close above the pivot point, but even if it does, we got another resistance at 2,800. We're nowhere out of the water yet, and I know that you've got the 20 and the 50. I do know that the 200 period is about where we are right now on this price. Mm-hmm. It's not going to serve as a strong catalyst on resistance because it's been going back and forth above and below that 200 for a long time. Is a breakout here on this pivot enough for you to get more aggressive or more bullish than you've been in the last 2 weeks? Or is it kind of just the same?
No, I'm still slightly bullish.
Yeah.
No, I would not change my bias to the market simply because it's breaking out. We've been slightly bullish ever since we got above the 2,600 handle. And, I've talked about this in the past, whereas, I missed out on a lot of this run, Tim. I didn't buy it. I didn't believe in it. If we were coming out of that, horrific December, and, I was looking to short here, got whipsawed out right there, and then it started kind of hanging into this 2,600, was still looking to shorting opportunities at this point. But once you got back above 2,600, I moved into a slightly bullish capacity. Once we got above 2,650 and 2,700, that's just more confirmation. But no, I'm not going to just go out there and get aggressively bullish. There's still concerns out there in the market. I'm still concerned about some geopolitical situations. I'm still concerned about slowing growth. I'm still concerned about China, and I'm still concerned about Brexit. So, nothing today, stops those concerns. But yeah, let's celebrate a breakout. That's fantastic. We got a lot of great triggers today. And Tim, if you'll remember, we were talking about this yesterday about how this was a really good opportunity in a slowing market to get your triggers out there. And on a day like today, then, if they weren't triggered in yesterday, they should be triggered in today on a lot of those stocks.
Yeah, there's a lot of things setting up today. There's no doubt about it. One of them we're going to talk about later, but it's Spotify. I've been watching this stock for a while, Matt. They gapped down on earnings. They're coming back. Now they're breaking resistance. There's many stocks that are doing that across the market. Look at that candle.
That's just a beautiful breakout.
Yeah.
That's just a beautiful breakout, already confirming on the breakout. And, here's something important to think about when you're looking at Spotify and you're saying, okay, and let's say hypothetically, I'm not in a trade here, Tim, on Spotify, and I'm saying, okay, do I want to get in on the breakout day, right? Do I want to get in right now as it's close, as it's obviously moving above that 140? All of that. That's a question you have to answer. And if you're an aggressive trader, you would look to get into a trade right now on Spotify if you're an aggressive trader. And if you're an aggressive trader and you didn't get on the breakout and you're saying, okay, let me just, flip this down to a 15-minute chart. Here's the breakout of 140. Here's the high base. It's a very easy trigger above that high base channel for another entry. The second more conservative way, and we'll talk about this a little bit more detailed later on today, but the second more conservative way to get into a breakout type trade here, Tim, and I think it's important. I think it's important in this type of marketplace. Wait for it to close, right?
Mm-hmm.
Wait for it to close above that 140 level, and then identify that entry above those highs of the day coming into tomorrow. So again, love the breakout on Spotify. Just wanted to talk about a couple of different conservative versus aggressive ways to get into it.
There's all kinds of different entries in a situation like this. And going down to an intraday chart, I think, is one of the most important things to do whenever you're trying to find a trigger. One of the topics we're going to dive into later today on a Delta Tuesday, and we're actually going to look at Apple and Netflix on these, Matt, because they haven't triggered yet, is how to identify that exact trigger,
Mm-hmm.
and little subtle things like that are very, very important for the market. This whole thing with the government shutdown, I did not expect the optimism we see. I mean, the market didn't care when they were shut down. Now that they're having resolution, we're running. I don't think that's the whole thing. I think the market's just bullish. It's going to find excuses to want to buy.
It's just removing one obstacle, Tim. I mean, in a market environment right now where you have 4 or 5 situations that could really spark some fear in the market one way or the other, the market's going to celebrate removing one of those obstacles. Right. And yes, it's all over the news. Is Trump going to sign? Is Trump going to sign? Yeah, I think Trump's signing this bill. I think it's political suicide not to sign this bill. Now, whether he does some executive orders to spend on the wall, that's a different debate and different discussion. But I do believe that most of the market thinks this is going to be a done deal. And so it's removing one of those obstacles from the equation. And now we're just focused on, positive headwinds coming out of China. And we have, an important meeting coming up later this week on Thursday and Friday. And hopefully we get some good news there. I mean, really, the only negative news is Theresa May begging for more time on Brexit.
Well, we knew that was coming. I mean, it does not seem like they're going to have a resolution there. And I don't know if the European Parliament, the European Central Bank are going to want to give that kind of thing. Who's in charge over there in Europe of that? Is there a parliamentary procedure to this, Matt, and how that no Brexit?
I'm not an expert on European parliamentary politics.
I don't know either,
I know the EU is negotiating with Theresa May's government out of London. That's what I know.
And they don't have resolution yet. Top 5 gainers on the S&P today: Cody, Bright House Financial, IPG, Under Armour. Let's take a quick look at UAA, if you would. It's up 7%. Under Armour, they had their earnings and they beat holiday quarterly profit, had fewer discounts. They're jumping here today. I know you love your Under Armour.
Yeah, it's one of my favorite brands from a sports apparel.
Mm-hmm. That's a pretty impressive candle, Matt. It ended up starting down. Looked like it wanted to sell, and now we've rallied and broke out on resistance on volume.
Tim, that's a gap down on the that's literally a gap down on the earnings announcement and then a run. That's a beautiful break. You can trust that type of movement.
COTY, if you would. It's a small dollar stock on the S&P 500. We got no producer Cody today. He's got the day off, so we'll look at the stock Cody here. Just take it off.
I have no clue about this company. Don't trade this company. Don't know what they do.
Well, they had earnings 3 days ago, and it was up big on that. They are clearly running and running and running. If I look at the news and the financials, I don't know them either. When I see a price this size that's gone from 7 to 10, it's going to get me interested, but I'm not going to chase anything like that.
Put it on a watch list.
Watch list it.
You're not
consumer
chasing. Goods,
personal products.
Yeah.
They do something in the consumer space, it looks like. Moving on to some of the losers here today on the S&P, Matt. We've got Molson Coors, Gilead, Everest, FMC. Coors is down. TAP, beer company here.
Earnings.
And those are going to be the headlines here today. You're going to get earnings-specific companies, market leadership in different areas. Obviously, a gap down like that into a range, that's more of a neutral gap.
It is, but I don't know. That closed under 60. 55's inside.
No, it's got downside.
Yeah.
Yeah. But I mean, 65, 55, anywhere in there could be in play. And so if it's got momentum down. I see it as well, but I see a gap down into a range, not necessarily below support. Dow Jones, if you would, the YM contract. I've been talking about leadership out of the space, but actually the S&P and the Dow look almost identical. You had 4 red candles coming back, green candle, not only taking out the retracement, but now the pivot point, Matt. What are you seeing the Dow?
Same thing. S&P's break-in, Dow's just sitting at that intraday resistance level. And once again, when you're kind of in that range here, just drop it down into a 15, 30-minute chart, identify that range, and you're looking at 25,387 here at the top there. So you're sitting right there at that resistance level, Tim. The S&P is slightly above that level. So if you're looking at this from a potential, is this momentum going to carry? I would like to see it get back up, back up above, but give me a trigger above 25,400 on that. But you got to love the momentum here, Tim, on the Dow and on the S&P as well. The Dow is sensitive to those Chinese trade talks. Very, very sensitive to those Chinese trade talks.
Caterpillar's the number one gainer, Matt, and Caterpillar's an international, just conglomerate that obviously if you have international growth, it's going to benefit from that kind of thing. Caterpillar's up 3% today.
Mm-hmm.
Yeah.
Boeing wants to run.
I keep saying it. I mean, everybody does as well. You asked me on the podcast the other day which sector I like the best, and industrials was my answer. I'm seeing so many of these bigger companies and bigger names with leadership.
Oh, you didn't hesitate.
No,
you didn't hesitate. There wasn't even there wasn't really a discussion on it. I asked Tim, "Hey Tim, what's your favorite sector right now?" And he pauses for a second. He says, "Industrials." Mm-hmm. I mean, it's just something that wants to run, and we're seeing it. And obviously, if we continue to see positive, not deals, but positive information coming out of that Chinese trade delegation, and especially on Thursday and Friday, and if you remove the Chinese trade war from this marketplace, man, you could run.
Yeah,
absolutely.
Bring up Intel. I got a question for you, man to man here, trader to trader. If you get stopped out of a trade in the last week, do you come back and take the next signal on it? Because I actually bought the breakout on Intel last week and then got stopped out when it came back into the range.
The only thing I would do is wait for a close and trigger above the close. That's the only thing I would do. I would still hit it. I'm still looking at that Intel. It happened to me too. So I'm still looking at Intel, but instead of just getting above and aggressively getting into it, if I get tricked, I'll do it again, but I'll be a little more conservative on that entry. Give me a close above 50 on Intel, and then put that trigger in above the high.
Yeah. Yeah, I'm still watching Intel. Obviously, I will trade Intel if it breaks out again. It can be frustrating for a trader when you get stopped out on a company, and you don't want to trade out of vengeance, Coach Noah. Obviously, the emotions of trying to get back at the stock is probably not a healthy way to approach a breakout trade. But
signals on your personality. Vengeance could be a very strong emotion.
Is that? Yeah, it sure can. I'm looking at the Dow. There's not much down. There's only one stock down.
You've seen me attack Goldman Sachs before?
Strong emotions with that company for sure.
All I'm saying though is I'm not going to not make a trade that is a legitimate trade simply because something happened last week when it broke out. Never really closed above that, Tim. You were aggressive into that entry above 50. I was aggressive into that entry above 50. We had our triggers in above that level so that when it went above 50, it triggered us in, came right back down that next day, stopped us out. But so what? We had cheap risk. We had an aggressive entry with an aggressive stop loss right under 50. You got stopped out. You took a small loss. So what? Approach it again with Intel. You're looking at the exact same situation on Intel. Just modify your approach a little bit. Wait, you got fooled once. Now wait for it to close above 50, then get that order in above the high of the day.
Fool me once, shame on you, Intel. Fool me twice, won't get fooled again. I'm not sure how that went back.
I was wondering where you're going there. I was wondering if you were going to get that one on. If you were going to get that one right. I was thinking Jim Carrey on some movie at some point, or
McDonald's the only stock down today, only down a penny though. Not exactly a red day on the Dow. Everything is up, 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 up. MCD flat, but you're just getting a rotation into the aggression, into the industrials, into the more aggressive companies on some of the news that we're seeing. 29-1 advanced decline line, strong volume as well.
29-1. That's a whooping.
That's a whooping. Yeah.
That's a whooping.
That's a whooping. All right. And let's move on to the NASDAQ next, Matt. There's a lot of action going on in tech here today. NASDAQ 100's got a 95-5 advanced decline line right now. You're seeing strength across the board. Electronic Arts, number one stock.
Can I tell you a quick story? I was in a trade, and I can't remember what trade it was, but it was a bullish trade. And the market went up like 2.5% that day, right? And out of the S&P 500, this was an S&P 500 component, there was like 496 to like 6, right? And I know that's above 500, but you guys know how to do the math within the S&P 500. That was one of the only 6, and it was down like 3% that day. I feel bad for the people that are trading the one stock that is down on the Dow today, or the 5 stocks on the NASDAQ. Right. It's unlucky.
So you go into the market and you're like, okay, I saw the headline news. I heard it on the radio.
Market's up 2.5%, and you're thinking, man, I can't wait to check this. I can't wait to get paid.
Profit on that McDonald's trade.
Oh, I can't wait. Oh, and then you log in, you're like, what the mother?
Yeah. A few choice words. I get it. The NQ here, obviously, it's got a big day, 1.3%. Not exactly a blast out day. We're not 2.5%. So let's not go nuts.
And it's not breakout. It's not breakout yet either.
Not yet.
Neither on the Dow. Neither on the Dow. The S&P is above those levels, but these are hugging those intraday resistance levels. I would take it as a positive, a close above 27. Not 27. I'm so stuck on the S&P. Above that 7,000 level, Tim. That 7,000 level is a significant whole number. It is. It's one of those big numbers that everybody looks at. But just to kind of recap here, you did close above that level, came right back down. You did close above that level, came right back down. Let's see that close and run. That's what I was talking about earlier with the one trade we're talking on Intel. Let it close, and then it runs.
I'm fascinated by these gaming stocks, Matt. It just is incredible to me that you're having real winners and losers in real time, like a battle royale game. EA is blasting out. I know those are nasty candles. You cannot chase that unless you know something I don't.
You can't touch EA right now.
No. But they're going out on all of this news of them just having that new game come out, all that exposure, all those new gamers coming into the free model. And we know what free models can do. Look at Fortnite. I mean, it's incredible. But then you look at Take-Two, day over day, EA is winning and Take-Two is losing. This was one of my trades of the week. I put it on the option report. I argued strong for it last week. A gap below support on earnings and volume is weak and pressure. We've now taken out the low pivot here, Matt. Take-Two losing, EA winning. What's your read on this?
My read is very simple. If you did make that trade like we talked about in the options report, I think you lock in profit here. I really do. You're down at least 5 points off the entry. Snapback rally intraday, causing looking like a hammer type candle. I think you take it, maybe lock in a little bit of profit. You have 5 contracts, lock in 2-3 contracts type situation. If you're looking at a new entry here, I think you got to wait for Take-Two to set up. With EA, my God, find me an entry on EA that's legit.
It's hard.
I mean, outside of day trading, obviously.
Well, not just that. You're also walking into Activision's earnings here. ATVI Blizzard, is one of the biggest stocks in the space, and they got earnings tonight. So here's the thing. The whole sector can move on information like that. And we know they're very, very volatile and very much, moving like this crazy lately. So I don't know what to do with the ATVI earnings. Probably just hedge it and wait to see a reaction. If you're doing cover calls on Activision, or if you're an investor in Activision, you absolutely have to hedge this earnings. There's not, you don't need to look at the analysis. Just know the volatility that's in the gaming industry right now. Activision expected to come in at 1.29 earnings per share. Revenue is supposed to be about $3.05 billion in revenue. So obviously that's going to be a very, very important earnings report. With Activision so depressed, I think you'd have to have a miss to get a beat.
right? But you got to hedge. You absolutely got to hedge.
Yeah.
By the way, Activision is going to test us on our first hypothetical kicking somebody off the tackle 25 tonight.
I'm going to tell you right now, if they miss and they go into a further depressed downtrend, especially on the news that they lost that licensing agreement. See, this is why we have the rotation in, Matt, right? Because we know things can happen. When we were picking Activision, we wanted to pick a gaming stock. We looked through all the fundamentals. They were good, but a lot of that was based on them having the Destiny agreement. That is changing. Their fundamentals are changing. Their core licensing agreements are changing. And their core audience, by the way, has been booing them at BlizzCon. So
ever since Coach Frank told us about them getting booed at BlizzCon, they've been getting just hammered, right? And then they lost Bungie, right? They lost Bungie just last month as well. And now they're, broken major support at 45, sitting at another support level of $40. If they miss and break 40, we'll most likely remove Activision from the equation. But I got to see that first, Tim. I got to see it. It's still a good company, and it's still a really fundamentally solid company, and it's a great covered call company as well. So
I like their brand too. I like
Frank booed him too. Frank booed him too.
I don't know if you saw the story I posted on my own Facebook page, Matt. I read one of the most heartwarming stories about a disabled kid who was playing Warcraft, just passed away recently, and how his guild, they love that kid so much. And the only way he can interact with the world was through gaming. And they found a way to do a GoFundMe and fly out to his funeral.
I read this story. It was like yesterday or the day before. It's a heartwarming story.
Yeah. Yeah, gaming is awesome. I mean, if it can connect, and by the way, YouTube, if we can all connect and create a community online and it helps us all, it's amazing. It's an amazing world we live in.
So is this our guild? Is that what you're trying to say?
I kind of
like this our faction,
our tribe, our faction,
our tribe, guild. Right?
All right, halftime.
Hashtag Team Tackle, baby.
Team Tackle. That's right. Moving through the NASDAQ, one of the big stocks down today is Marriott and Gilead, GILD, Matt. The biotechs are going to run when a stock like, and Marriott's not down a bunch. Actually, it's funny. Third biggest loser on the NASDAQ's down 0.5%.
Yeah, it's a doji.
Yeah, but Gilead's down on some non-earnings news, which is never a good sign. Has to be a downgrade, I'm sure.
Can somebody in the halftime crew look up the news on Gilead? Let us know why Gilead moved down today. Much appreciated.
Gilead's failed NASH drug trial drags stocks lower. This is why they say don't do drugs. Drug stocks and
let's rephrase don't do drugs. Okay. That is a market cliche from very long time ago, right? And that market cliche comes from those smaller companies that have the miracle cure for cancer, for example. Right. And they have this one drug, and this one drug has FDA approval, or if it doesn't get approved, it's going to get blasted. That's gambling. That is pure gambling in the marketplace. When you're talking about the massive biotech pharmaceutical companies, though, I wouldn't necessarily, and I know you weren't doing this, you were just kind of saying a joke, but you can't put them into the same category as, say, the micro drug company, right?
I'm trying to remember the name of the company. It might be BSIX. Try that symbol real quick. Biosciences something, BSIX. Yeah, they might even be delisted at this point or something. I remember I was trading a company when I was new, Matt, and I didn't know this at the time, and I bought the stock, and they only had 2 drugs. Okay.
That's not Pfizer, bro.
If they have 2 drugs and they lose 1 drug because the FDA says it's not legal anymore, the stock went from 60 to 10. So those are the ones you're talking about, basically the market cap and things like that. Biogen, though, BIIB, is a $200 or $300 billion company. So you're not talking about the same kind of risk with Biogen.
With a ton of patents.
That's right.
I mean, okay, so this is kind of how I rank those drug companies, right? You got your Mercks and your Pfizers, which are your staples. Those are like your McDonald's and Walmarts of the pharmaceutical companies. Then you have your aggressive that perform more like tech sector type companies in Biogen, Regeneron, Amgen, those types of companies. And those are perfectly fine to trade the same way, trading Google or Amazon or whatnot is, right? But then you have your smaller drug companies like you talk about that you should never, ever, ever, ever touch.
Yeah, I agree. I agree, especially from an equity perspective. Or if you're going to do it, here's a lesson we've taught many times: collar the dang thing. I mean, if you're doing it with a collar, you've got the insurance up front. I could see a different scenario there, but I'm with you 100%. As we move through the market, give me the Russell 2000 real quick. The Russell had relative strength yesterday. It was really interesting watching the close.
That's a breakout, baby.
It sure is. I mean, that is a breakout with clear air in an uptrend at this point, Matt. I know we've got resistances coming in here, but you've got to respect the strength in RTY.
It's stepping stones. You're climbing a stairs. You're climbing a ladder. You broke out of one resistance. Now that 1525 handle we talked about yesterday is now the intraday support level. Now you're targeting 1550 on that next step, and we're just climbing to the next step. And that 1550 is an important level of resistance. As you can see, that was the pivot point right here. So I do expect it to perform as a resistance level. It was resistance here. It was also support over there as well. But that 1550 has to be a target. It's going to be a magnet for the market.
Mm-hmm. With this moving up and higher, I will tell anybody out there who's a condors trader, there are times where it's appropriate to add half of that position. It's an advanced system. I would review what Coach Tyler did in the education and the videos to understand and identify, because we're about at that opportune moment to add the April contracts, Matt. And I know a lot of traders are going to be watching that this week. So trade appropriately within the design of your rules for sure. Move on to the dollar.
To answer Justin's question specifically, though, I wouldn't hedge until it breaks 1550.
Mm-hmm.
That intraday break of 1525, guys, you don't want to hedge a 10 delta cash flow system every time it breaks intraday resistance. Mm-hmm. You just don't want to do that. So if I had sold the 1600 bear call spread in cash flow condors, I would maybe hedge as it approaches above 1550. But again, I'm not going to micromanage those systems. I'm just not going to do it. Markets don't go straight up. Now, is this giving everybody a little bit of fear in that system? Is this giving everybody a little fear in that system? Absolutely, 100%. But look what's happening here. We're getting back more into stable trading environments. We're not getting the 2-3% down, 2-3% up. We're not getting that right now. So, I wouldn't aggressively hedge that system right now. But obviously, if it approaches your strike price, you got to do that.
Yeah, and here comes a very bit of simple guidance. You should be able to map out your risk. If you have fear about something happening, you're probably over leveraged,
If you have fear, you need to go watch the videos again.
Damn straight. RUT indexes. I love that system. I'm going to trade it for years. I know how it works, and you position size accordingly, and you hedge only if you have designed those rules into your own personal system. Let's keep moving through the markets here, Matt. DXY, the dollar sign DXY. And the dollar has a red candle here today. I was talking to some currency traders this morning, and somebody asked me, Tim, when do you buy this pullback? And I'm like, I have no idea.
What?
Maybe with a kiss hello.
When to buy the pullback on the dollar?
Yeah, they were trying to project out 3-4 days, and they're like, okay, do you buy it if it pulls back into like 95.5? Are you waiting for a deeper retracement if that develops? I don't know.
Well, that's not a pullback. So that's not a legit question. It's not
Thursday,
a pullback.
Friday, that needs candle scenario.
Okay. Listen, you want to give me the candle scenario? Well, we tried that yesterday. Unfortunately, the dollar was supposed to go to 97.70. So gold would give me my trigger at 1300. It's not doing it. It's trying to hold 1310.
Yes, it is.
I'm not going to get 1300.
You may not, brother. I mean,
so trigger above 1320. If I don't get my 1300, trigger above 1320. Is that the game plan?
Or just build a call diagonal spread and call it good.
Oh God, no! Stop being the advanced elitist trader. Seriously, give me a back ratio call spread, double diagonal calendar, and let's throw a Debicon on there just in case.
Well, what you want to do is you want to add the Debicon to the inverted fly.
What you want to do is you want to buy gold. That's what you want to do.
I agree.
You're not going to. Oh my God! Give me.
Well, here's the thing. I mean, if it's a position trade, do you need the same trigger as a swing trade? Okay, because if you're going to buy it for multi-months, and And we're really getting down to splitting hairs between $3 or $4 here or there, but you've got your risk decided.
You could easily make a decision to buy gold at 13.13. Are you kidding? Yeah. Easily. That is not a hard conversation. I'm just trying to maximize efficiency. So the question is this formed that retracement that we talked about? 1310 is obviously acting as support, Tim. Mm-hmm. And the only surprise, gold should be up a little bit more. It should be up a little more with the dollar coming down that strong. But no, I'm still waiting. I'm waiting above 1320 or down to 13. That's my plan.
Probably the commodity of note here today that we do have to deep dive on is crude oil. Did you see? You were the one telling me about that Saudi stuff, Matt.
Oh, I'll give you a couple numbers here. Saudi Arabia announcing cutting 500,000 barrels a day. That is on top of a reduction of 800,000 barrels a day coming out of all of OPEC in January, down to a rock solid 30.8 million barrels a day being produced out of OPEC. So, oil's going up on obviously the cuts and the announcement of further cuts with Saudi Arabia. But Tim, even at that 30.8 million, that's more than the demand justifies, and that's even coming from OPEC, right? So one of the reasons why oil isn't doing even better today, and it's having a really good day, is just even with those cuts, with the projected slowing growth in the global economy, they're still overproducing. Mm-hmm. And that's not even taking into account what the U.S. is doing, and the U.S. doesn't care what OPEC does in any capacity.
Right. I mean, I'm looking at this from a technical perspective. Obviously, the news is driving the price up here today, 2% or so. Technically, though, until I get above that pivot, I really can't buy.
You're getting a little bit different ranges here, though, than our standard 50 by 55 that we were, kind of tracking. You're really kind of now up here, right here at about 55.81. That's kind of now your range. You do have a short-term resistance level right here at about 54, but you got pretty strong support forming right around 52. So keep an eye on that 52 handle. To me, I do think crude is back to being tradable, with bull puts on crude oil, not naked puts on crude oil, but bull puts on crude oil, and then naked puts on USO and covered calls and all that jazz. But if you're looking to directionally trade this, I think you got to break. And you can't buy a short-term bounce off 52. I think you got to break. That 52 handle is more of a day trader handle.
Mm-hmm. Bring up BZ. We rarely do this in the halftime report. We'll do it in the commodity report every weekend. And there's usually not that big a difference between the patterns. I'm seeing difference here. Okay. I mean, we're about to break out on Brent, whereas you're not breaking out on crude. Obviously, strength is strength. Does it change the nature of the signal? And would you end up opting for Brent here, clearing a pivot instead of crude off support or vice versa?
No, I live in Utah.
I trade that light, sweet Texas crude. I get it.
And I am an adopted son of Texas. I trade that West Texas oil, the light, sweet crude oil. I'm an American, Tim.
Yeah.
I don't trade that London oil.
You're a true patriot, Matt.
I'm a true patriot. I'm doing my job as an American patriot.
Back on the dollar for a minute, if you would. I want to ask you about Powell's testimony here today. When you see the Fed chair
speech and
speaking
something.
Yeah, it's the Rural Policy Forum in Mississippi. There's not much going on there. I don't expect the only real risk is like a Q&A section. But can you even imagine the market's going to run on this Powell news? I can't.
He's already speaking. He's been speaking for 20 minutes.
Yeah.
So what's Powell going to say that he hasn't already said?
That's my question. I don't see it.
Okay, so they do a complete 180 on us, right? Mm-hmm. Complete 180. And what's he now going to say? I was kidding?
Right.
What's he going to say? I'm really not that dovish?
Right.
I'm really not an ass? No, he's going to give a speech about economic development in the urban districts. I don't think it's going to have an impact on the market.
Mm-hmm. I'm looking across many of the other markets here, Matt. Gold, silver, they kind of look the same. Platinum's breaking down. Copper's got a beautiful pullback here. I'll break that down to the commodity report later in the week. All the currency pairs, cross pairs, There's not much in play here on that because on a one-day
Well,
pullback on the dollar,
well, hold on. Palladium here we got to talk about. Palladium was on one of our scouting reports,
that's
right?
one of your favorites too. It's been a
Yeah,
bullish just juggernaut.
it is a juggernaut. There's no doubt. I'd like Palladium more than I like gold right now,
Hmm.
but it's coming into a fairly important level of resistance. This is obviously, if you're trading Palladium, and we're looking at the futures, but PALL is the ETF, this is a time to trail up stop losses.
Hmm.
This is a time to scale out of a position to a certain extent. And Tim, there might be some people that watch this that don't understand what I mean when I say the word scaling out. Why don't you take a moment and just kind of explain it?
Well, scaling out essentially means you're going to take some of your position off the table. Okay. So, for simplicity, let's start with 100 shares. 100 shares of stock is a standard lot. In the futures market, obviously, we'd be doing this on PALL, which would be the ETF version of Palladium. In the futures market, it would be more like two contracts. But
Mm-hmm.
if you do 100 shares or two option contracts or two futures contracts, you have the opportunity when you reach a first target to take some of it off the table, you know. And if you think about like the trading scouting reports, the stock report, the option report, we always build two targets in that, you know.
Every time.
And there's a real simple system where you would take half of your profit at the first target and trail stop and let the other one run towards the second target. And so it's
Yeah.
just taking a little bit off the table.
And really, the first target is where you make a decision on what to do with scaling or what to do with trailing the stop loss. Typically in a swing trade, that second target, unless we're big green candles, big red candles coming into that second target, you're most likely just locking in profit at that second target. First target is the conservative target. Second target is the aggressive target. When you're doing a bullish retracement like this here, where you have a higher high now coming down into a higher low, first target is always going to be the previous level of resistance. Second target is either going to be based on potential average yield, Fibonacci extension, significant whole numbers, extended trend lines. I mean, just, historical pivot points. If we're looking at some type of, breakout and we still have overhead resistance, things like that. But a lot of times when you're coming in, and I'll highlight this, as you're coming into that first target, you see it start to slow down here. And
Mm-hmm.
that is that slowing impact. So you're all happy here, you're sad here, and then you're like, oh, wow, that's just kind of looking like a little U shape right there. And so that's what slowing momentum is. And so at that point, you certainly could make a decision to lock in some profit. You can certainly make a decision to scale out. You can certainly make a decision to trail out the stop loss. But the only bad thing you can do is absolutely do nothing. That's the only bad decision you can do, is do nothing. You got to make a decision and take some action here because of what you're seeing in the data.
Yeah, I agree with that. Well, inaction is generally one of the bigger mistakes people make, either not buying, not investing, not doing something. It's okay to make mistakes. And actually, if you do it right, you will make a lot of mistakes. You're going to have stop losses and whatnot. But taking action when you see information that hit your target, I think that's very, very smart, Matt, as well. Not a lot of economic stuff going out throughout the week besides CPI, PPI. We talked about it, but we'll talk about that tomorrow. There are some key stocks with earnings tonight. Just a quick heads up, we do have HubSpot and Groupon and Twilio, which I like. Tomorrow you got Tiva, Hilton, Tech, Dish. Make sure you check your earnings calendar. But really, Matt, what I want to do next is I want to break down the two companies that you and I identified. I was showing you a Spotify breakout when we started. I'm like, Matt, you got to check out Spotify. And you're like, we started talking about triggers, because that one's already broken out and you've kind of missed a first trigger. So you'd have a second trigger, maybe developing here intraday or something along those lines. And then we also found Apple and Netflix, which actually have not triggered yet. And I wanted to discuss, how do we identify a trigger point?
Well, let's put it like this. There's multiple ways to trigger into any position, right? Whether you get your confirmation and then you drop it down into a 15-minute chart to find your specific area you want to target and trigger at. What I want to talk about is the difference between triggering on a breakout versus triggering on a retracement, right? Because and a breakout that has not confirmed yet, right? That is not confirmed above its resistance channel. So the first stock I want to look at very quickly, Tim, is Apple. Apple here, coming from I believe it's on the options report this week, correct?
Mm-hmm.
Apple here coming from the options report. Apple's trigger, when you're dealing with a bullish retracement, there's a couple different ways to trigger. Number one is you can trigger just simply, very simply put, you can trigger 10% of the ATR above the high of the day, right? That's a very simple way to trigger on a bullish retracement upon confirmation is you just take 10% of the ATR, 10% of the ATR right now is 40 cents, 40 cents above the high of the day. Let's go, high of the day is, 170.95. So 170.95 plus my 40 cents, I'm going to get in at 171.35. So that would put my entry to get in, and let's drop this down to a 30-minute chart. That would put my entry to get in right here above that intraday resistance level right here. The second way to do this, and probably, Tim, the better way to do it is instead of just looking at the high of the day, drop it down into this 15-minute chart. Look at the past few days, because if I trigger at 171.35, Tim, right there, I'm triggering literally right under the tick of the high of yesterday. So you might want to drop down and look at these intraday levels to find a level that you want to get in above and say, all right, well, maybe I don't want to trigger in above 170 above the high of the day, but I want to trigger in above the high of yesterday at 171.20, and that would put your entry at 171.60. So depending on how you want to go about it, I think the better way is to drop it down into a 15, 30-minute chart, find that intraday level on resistance off the retracement that you're like, yeah, that's where I want to get in. That's my trigger. And the rule is, and I want everybody to write this down in the chat, guys. Everybody write this down. 10% of the ATR above whatever that is. So everybody just write 10% of the ATR.
10% of the ATR.
Okay. So that's off a retracement. So either one, you put that above the high of the day.
Real quick note. I know it's a simple thing, but we do have a lot of beginners out there. The ATR on the daily chart.
It's the ATR on the daily chart. And also, when you first add ATR, guys, it might read as Wilder's. I would recommend using the simple ATR. We all use the simple ATR, correct, T?
Yep.
So we were doing something in our scanner report, and we were talking about something in a show one time, and I got an email just the other day and it said, hey, Matt, listen, my ATR doesn't look like your ATR. And I'm like, oh, easy. You have the Wilders. It's just subtle. It's not big deal. It's not big deal. But just make sure you're using the simple version of the ATR. So that's number one off the retracement is you want to use 10% of the daily ATR either above the high of the day on your confirmation candle, or two, you want to make sure that you get in above that overall intraday off that slowing momentum. It's not this downward movement in price, Tim. It's the slowing momentum over the last three candles that you kind of want to look at. And that technique, you would just drop it down into like a 15 to a 30-minute chart. The next trigger that we were talking about was on Netflix. And Netflix, and this is one of my favorite triggers on a breakout, right? You have two ways to go about going in on a breakout. Number one, you wait for it to close like Spotify, right? We got Spotify here. We got Lulu here, right? You got, great breakout on Lulu. Fantastic breakout on Lulu. Fantastic breakout on Spotify. But you don't get in on the actual breakout. You get in on the second day off the breakout by putting your order 10% of the ATR above the high of the confirmation candle on the breakout. Now, that is a wonderful technique, a conservative technique into entering into it. But a lot of times we see something like Lulu and you're like, oh God, I should just put that order in above resistance.
Right.
And then you have, Intel, Tim, where you're like, man, I put that order in above resistance and then it snapped back and, whipsawed me out. It's going to happen, right? You're really weighing reward versus risk versus probability. If you wait for it to confirm on the breakout, like Lulu is, and then put that above the high of the day, 10% of the ATR above the high of the day, you're going to take on a little bit more risk. You're going to have a little bit less return, but you also have a much better probability. Would you agree with that?
Yeah, for sure.
That's the conservative entry on a breakout, is you're going to have less return, more risk, but a higher probability, right? Now, the aggressive entry, take Netflix, for example. The aggressive entry is to get that trigger above the breakout channel before it confirms, so that you get into it upon the confirmation, right? And so here we have a clear level of resistance right here at 360. It is not broken out yet, but we're going to put an order to buy it if it does break out. Now, the only conversation, if you wanted to be more aggressive in Netflix on the breakout, is do you want to use a 10% of the ATR, or do you want to use a 50% of the ATR? That's completely up to you. Either one's fine. 10%, 25%, 50%, whatever it is. Now, a lot of times that 50% of the ATR, and I want you to think about this, guys. Resistance, we give resistance a number, right, Tim? We give it a number. Resistance is at 360. But resistance on a stock like Netflix that trades literally $10 a day, it's not 360. It's a zone around 360, right? And a lot of traders would assess that zone to be about 1 ATR total. And so that zone wouldn't be 360. That zone would be 355 by 365 or somewhere in that. So what happens is if you put it in like in a 10% ATR above the resistance, you're still within that zone of resistance. And so you don't have a high probability of it confirming and then running on top of that, because it's still within that overall zone of resistance. It's like it ticks up, ticks down, ticks up, ticks down. So you certainly could do a 10% of the ATR above the resistance zone. There's nothing wrong with that. But I like somewhere around a 25 to a 50% of the ATR above that level. That gives me a little bit more confidence that the breakout is legit, and I'm not just going to get whipsawed like it was on Intel. Now, by the way, Tim, it would not have mattered on Intel. It would not have mattered if you put a 10% of the ATR, 25% of the ATR, or 50% of the ATR. It would not have mattered. You would have got whipsawed anyways. That's going to happen. So I like using somewhere around 25% of the ATR above the breakout channel. So if my ATR is $10, let's just call it $10, 25% of 10 is $250. I'm going to put that order at $362.50. So I get in at $362.50. Now, whether I do a contingent on an option or just do the stock is up to the trader who's doing it, but it's going to be anywhere between that 10 and 50%. 10%, very aggressive on the entry, has a greater chance of whipsaw. You obviously have less risk there and greater return. A 50% of the ATR, you're going to have a little bit less return. You're going to have a little bit more risk, but you have a much better probability. So I kind of split those mids and just put it at 25%.
Whatever that rule is for a trader, obviously it needs to be specified and written out and understood. Now, once you trigger in, and I love what you're doing here, Matt, especially on these breakouts, you got to identify that zone. It's not just a penny point number because you have to understand the psychology behind it. And I'll tell you, for me, quite frankly, it depends on what time of day on whether or not I'm going to take an aggressive entry. If it's right at the open, breaking 360,
you'll take aggressive.
Ding. Let's go.
You'll pop.
Right. But if it's late in the day, I've got 5 minutes to close and it's just barely poking its head up there, probably not. I'm going to wait. So knowing the
question though, but yes, but that's for you and me who's staring at the market every day, all day.
Everybody else doesn't stare at this all day.
I'm willing to bet that hashtag Team Tackle doesn't stare at charts all day like you and I do. So what about, and I'm just spitballing here, but I would say, a majority of our community, has responsibilities during the day and they can't sit there and stare at charts. So you're absolutely right on your trader skill set. But what about that individual who's putting in orders at night, right? You have to also, understand that you can do that as well. So for example, if I'm, for like even when I'm speaking, Tim, I still trade during the day, right? I still check it at lunch, check it in the morning, check it at night, check it during the breaks. Every now and then I'll shut my projector down and check it right then, right? If something's happening. So, but let's say I have a job and I have to go to, and I'm a lawyer and I have to go to court today and try and present my case. And, you know, I'm obviously not thinking about the stock market, but you know what? I want to make some money in the stock market too. I want to, you know, put in an order at night, right, to get triggered tomorrow in case I'm not there, right? Well, this is the same techniques that I talked about just barely can be the exact same thing you do at night. The only difference is instead of just putting a contingent order to buy it at 362.50, or instead of just putting a buy stop at 362.50, what you would do is you would right click, come down to buy custom, and you got that OCO bracket order. Now, what an OCO bracket order is, it allows us to put our entry, our stop, and our target all in the exact same order. And if I click on that and I drop that entry order into what's called a buy stop limit order, and I put my buy stop at that 362.50, and I put my higher limit, I'm just going to do 10% of the ATR above the stop price. 10% of the ATR is $1, so that'd be 363.50. Okay, so all of a sudden I have now bracketed my order in for tomorrow, Tim, that or today, that if it goes to 362.50 by 363.50 tomorrow, I get triggered in. And I can go down and I could be driving my truck, right? Right, Maria? Or I could be arguing my case, or I could be hanging out with my daughter, or I could be at the beach, or I could be at work, or whatever it is. I don't have to be in front of the market to trade the market and take advantage of everything that, you know, we do as traders and what we do in our community with Tackle. You have to learn how to control entry through orders. Oh, and by the way, halftime crew, did you guys see Coach Noah's option Greeks? We call it the Spider-Man. It's like 5 YouTube videos back to back to back, like all 4, 5, 6 minutes. Awesome videos. You guys, if you've not checked out that Spider-Man on the Option Greek series, make sure you go check that out. But we got a new one coming out for you guys, and it's coming out fairly soon. I don't know exactly what the date is, but it's on order entry. Everything we're talking about here, helping you guys out on order entries, they're going to be awesome too.
Yeah, order entry, targeting, stop losses. I mean, these basic mechanics are very important. And I got a question for you, Matt, because I know a lot of traders, and we just did a podcast on how to get started with less capital. A lot of traders want to rush into options to get the leverage. And I love the options market. But there's some validity in just saying, hey, you got to learn how to trade a stock before you trade an option. Do you buy into that, or do you think you can bypass the stock step and go right into options?
Well, I mean, that's a trick question.
That's why I asked it. I want to hear your thought.
My thought is this: with education, you can bypass stock.
Yeah.
With community, with system, with education, you can bypass stock. Without it, you shouldn't ever touch options.
Yeah, probably. I'm of the same mind. You know, stocks are great. They're simple. And if you've got a lot of capital, stocks are fine to trade. It's not like you have to go into
trading stocks. Stock's awesome.
Yeah, stock's awesome.
When I was young and dumb, you know, I was just, give me options. I had cover call, right? Terrible impression there, by the way. That was terrible impression. Wow. Anyways, that reminded me of Mark yesterday. No, if I don't even know what I was saying now. It's just I was too caught up on that terrible impression.
Second question, back to Netflix and Apple. Based on entering and triggering on a breakout versus a retracement, do you use different stop loss mechanics or the same? Because I know you could take a percentage of the ATR on both. I treat them differently personally because I think they're different. They are different patterns.
They are different patterns, right? There's a lot of different techniques in stop loss placement, whether it's 10% of the ATR below the low, 50% of the ATR under support, and I'm talking retracements. So 10% of the ATR under support under the low of the day on your confirmation candle. 50% of the ATR underneath support. That's my favorite one. 1.1 times the ATR underneath your entry. That's like a momentum one. Getting you outside the standard, daily movement in the stock. All of those are legit. My favorite one is 50% of the ATR underneath support, but that's only if your timing on entry is good. If you're waiting 3-4 days after confirmation, you cannot put a 50% of the ATR underneath support because you're just getting into the trade too long and you're taking on too much risk. But if your timing on entry is good, that 50% of the ATR, that under support, the what if you're wrong stop loss, that's my favorite. My second favorite is if you're late into it off the retracement, is find me an intraday support level and give me 10% of the ATR underneath that intraday support level.
Yeah, I'm with you.
When you're dealing with breakouts, okay, this trade for me would be very, very easy to set up. 25% of the ATR above the breakout channel, 50% of the ATR underneath the breakout channel. So we're entering at 362.50 by 350. Stop loss $5 on the 360, put in stop loss at 355.
I like it. Standard mechanics, and the thing about it is you could have them in your head well enough, in your rules defined well enough to where when you're approaching a situation on a day-to-day basis, you know exactly what you're going to do. There's always going to be some gray area, Matt. You can't take subjectivity out of everything, turn everything light switch, but you should have as much of it out of as you can.
When you're dealing with new traders, right? You have to be very, very specific in rules. It can't be, one, but if not one, let's go to two. And if not two, let's go to three, right? Every trader has that arsenal in it though. Here's one stop loss. If it doesn't fit the technical condition, here's my second stop loss rule. Here's my third stop loss rule, right? But with new traders, you got to be very specific. 10% of the HR below the low of the day, whatever that rule is, you got to be very specific. But a year down the road, after you've been in the community, placing trades, being active, you can modify those rules and you can, start fitting those rules. But Tim, even some of the rules today that I trade, I learned 13 years ago.
Yeah.
Originally from Legacy 13 years ago, right? Now, has some of those modified and changed? Obviously, lots of them have. The market has changed, but some of those fundamental principles are still the same.
I agree. And they don't change, and your money management doesn't change. Things can evolve, and you will evolve as a trader. And we're going to do it day by day here in the halftime report. One last stock, Shopify SHOP, Matt. It grabbed my attention during the show here. Came up as a trending stock, obviously earnings. I also read a little bit about their SaaS profits. This is an interesting company, newer company, gap down, rallying back on some strength. I'm going to start. I've not traded this one before. I know everybody else has been talking about it, but it's never been on my radar. I'm going to do some digging into it.
Who doesn't love a one-day retracement off a negative earnings report?
Oh,
I'm sorry.
Hey,
it was there. I took it. I'm sorry.
So you don't love one-day retracements?
I'm sorry.
What about two-day retracements?
I need to get a t-shirt. One-day retracement.
How about? Never mind.
No, you're not going to go the Vietnamese dong joke. It's not going to happen.
All right, guys. Tonight we got the coaches show. Tomorrow we've got mastermind groups. Got all kinds of stuff going on.
Ooh,
there, Matt.
The Canadian mastermind group tomorrow night. Coaches show tonight. Cash Flow Club on Thursday. Traders Lounge throughout the week for you pro members. Scatter reports on Saturday, and we had an awesome podcast yesterday, Tim. Just an absolutely just awesome podcast. Enjoy that conversation. And we played a new game in the podcast. The new game in the podcast was basically Mark created a game where he pulled some quotes from politicians over the last 50 to 160 years. He tried to trick us a few times. Let's see how good you guys do on the game against Tim and myself. And let me know how many points you guys scored. over there on Twitter. So at Matt Justice 13, at Tim Justice Utah. Go ahead and follow us there on Twitter. And if you're not part of our Twitter community, it is growing over there. We have just started this hashtag Team Tackle, and you can always find Frank, Coach Frank at Frank Martin 23, so he can get you added to the hashtag Team Tackle list over there on Twitter. And we just like to have fun on Twitter more than anything else. It's just a way for us to communicate more with our community. Maybe, apparently we're not in everybody's, our voices aren't in everybody's head too much.
Not all the time. I will give a very, very big shout out to Blake and Sess and a couple of my students I mentored last June, Matt. And I just had a conversation with them yesterday. Man, they're doing some pretty cool things. And awesome. I'll leave it for them to talk about them when they do. But building a trading edge, continuing to work. They show up here in the halftime crew every day.
They're amazing.
It's like Beth always said, the Hall of Fame student we talk about, you got to put your butt in the seat, show up, right? So keep showing up, guys, and we'll go from it step by step. Peace. We're out.
Peace. Now we're out when I can figure out how to stop streaming.
That's okay.